Here is a summary of Visa's Fiscal Second Quarter 2025 Earnings Conference Call. Overall performance and financial highlights. Visa delivered a strong second quarter of fiscal year 2025, demonstrating resilience and continued growth despite an uncertain economic environment. Revenue. Net revenue reached $9.6 billion, an increase of 9% year-over-year in nominal dollars and 11% in constant dollars. Earnings per share, EPS was $2.76, up 10% year-over-year in nominal dollars and 11% in constant dollars, exceeding expectations. Gross margin. While not explicitly stated as a single percentage, the strong revenue growth combined with controlled operating expense increases, up 7%, suggests healthy gross margins. Key drivers. Growth was propelled by resilient consumer spending, strong cross-border volumes, and robust performance in value-added services. Processed transactions increased by 9%. Payments volume. Global payments volume grew 8% year-over-year in constant dollars. U.S. payments volume rose 6%, while international payments volume increased by 9%. Cross-border volume. Excluding intra-Europe, cross-border volume saw a significant increase of 13% in constant dollars, driven by both e-commerce and travel. Value-added services, VSVS revenue accelerated to 22% growth in constant dollars, reaching $2.6 billion, fueled by issuing solutions and advisory services, including the impact of the Featurespace acquisition. Client incentives. Client incentives grew 15%, lower than anticipated due to deal timing, which benefited revenue. Management's forecasts and outlook. Visa provided the following expectations for the remainder of fiscal year 2025. Third quarter outlook. Adjusted net revenue growth, expected to be in the low double digits, in line with Q2. Adjusted operating expense growth, expected to be in the low double digits, relatively consistent with revenue growth, with some timing impacts from Q2 shifting to Q3. Adjusted EPS growth, expected to be in the high teens. Tax rate, expected to be between 17% and 17.5%. Full-year guidance. Full-year guidance for adjusted revenue growth, adjusted operating expense growth, non-operating income, tax rate, and adjusted EPS growth remains unchanged. Cross-border volume assumption. Q3 and Q4 cross-border volumes are expected to be in line with the average of March and April, reflecting normalization for Easter and Ramadan timing, and are projected to be slightly below Q4 2024 levels. Incentives outlook. Year-over-year growth in incentives in the back half of the year is expected to be higher than the first half, with sequential step-ups in Q3 and Q4 due to client performance adjustments and deal timing. Significant risk factors. While Visa demonstrated resilience, management acknowledged potential risks. Macroeconomic uncertainty. Continued uncertainty in the global economic environment could impact consumer and business spending. Geopolitical risks and nationalism. As a U.S.-based global company, Visa navigates risks related to trade disputes and government nationalism, requiring active engagement with governments and regulators. FX volatility. While managed, significant fluctuations in foreign exchange rates can impact reported results. Consumer spending shifts. While generally resilient, shifts in consumer spending patterns, such as deceleration in specific travel categories, are monitored. Highlights. Resilient consumer spending, the core driver of Visa's performance, with all spend bands remaining resilient. Strong cross-border growth. Robust growth in cross-border transactions, driven by both e-commerce and travel, exceeding pre-COVID trends. Value-added services momentum. Significant acceleration in VS growth, driven by new product offerings and recent acquisitions. Tokenization progress. Expansion of tokenization, with nearly 50% of global e-commerce transactions now tokenized. new product launches and enhancements, introduction of innovative solutions like Tap to Everything, new versions of Authorize.net, and a unified checkout experience. Stablecoin progress, reaching $200 million in cumulative stablecoin settlement volume and piloting programmable finance solutions. Shareholder returns, continued commitment to shareholder returns through a new $30 billion multi-year share repurchase program. Lowlights, deceleration in some travel categories. Certain segments within travel, like airlines and lodging, showed a deceleration in growth. Impact of timing factors on Q2, the lapping of leap day from the prior year, and the timing of Ramadan and Easter presented some choppiness in intra-quarter trends. Softer Canada to U.S. travel. A notable slowdown was observed in travel from Canada to the U.S. Most important statements from CEO and CFO. CEO, Ryan McInerney. Visa is one of the world's best businesses with strong growth and leading profitability powered by a world-class brand, innovative technology, an unparalleled network, and global scale. Even with the lapping of leap day from last year, consumer spending remained resilient in an uncertain and dynamic environment. Our incredibly diverse business model has proven to be resilient in the face of a variety of environments, most recently in Q2. We focus on what we can control and stand ready to make thoughtful adjustments when necessary. CFO Chris Su. Our second quarter results reflected strength in our business. Adjusting for the lapping of leap year, our trends were generally stable. We expect third quarter adjusted EPS growth to be in the high teens. As we've said many times, we are not economic forecasters. The potential impacts from tariffs have led to higher levels of economic uncertainty. That being said, what we've seen thus far in our results is relative resilience in consumer spending. Throughout our history, we've managed through different economic cycles, and we're confident we'll manage through this period as well.